Today I'm here with Cliff Bernstein. He is here with Fairway Mortgage. We are going to talk about what is going on in the mortgage industry. I hear so many different things about rates and going up, going down. Let's talk to Cliff and find out what's really happening.
A lot of exciting news going on in the industry. And the best news last week, the 30-year average on the rates hit 5.99%. on the 30-year fix.
Now, didn't we have that last year? Something like that happened?
This is the lowest since we've been in the last 3 years, where the 30-year actually on a national average. When we're talking FHA, we're talking a government-backed loan, and they're self-insured on these loans. Typically, the rates generally are lower on FHA, but the costs are more. So my first option is always going to be conventional. But if you're looking for interest rate, the interest rates are lower, apples to apples on FHA. I do feel rates are coming down, and rates do have the largest impact on housing. But you know what also has another impact on housing? The economy, the job market.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. And boy, oh boy, do we live in a crazy world. Should I say that? I don't know. Anyway, today I'm here with Cliff Bernstein. He is here with Fairway Mortgage. And we are going to talk about what is going on in the mortgage industry. I hear so many different things about rates and going up, going down. So let's talk to Cliff and find out what's really happening.
Hi, Laura. How are you?
I'm good. How are you?
Very good. Very good.
New year, new resolutions?
A lot of new resolutions. You know, we're still trying to complete the last ones from last year.
You know, it's funny, if we talk about resolutions real quick before we get into the mortgage industry, I did a crazy resolution this year.
What is that?
I don't know if I told you this. I decided that I needed to stop shopping.
That's a good one.
Yeah, but you can't do it.
Your husband must be happy.
Well, you know what? I have my own money, so that's not the issue. It's just that the Amazon driver did invite me to their wedding because they're there every day. Okay. I'm just kidding.
Right.
So I actually went to a hypnotist.
Oh, wow.
Yeah.
How'd that go?
I have not bought anything since I went to the hypnotist on the 1st. Funny, he called me on the 1st and thought maybe I wanted to cancel my appointment because it was the 1st of the new year. And I was like, no, I need to stop buying. I need to stop shopping. The internet has made it so easy with Google Lens and all these things. So,
So
today
how did that work? Did you feel the impact? Was the urge not there?
So, good question, right? Because at first I was like, I don't know, I kept looking, but then all of a sudden I started feeling like when I was looking, like kind of disgusted, which is funny because normally when I would be shopping, I'd be like, oh, let me get this and let me get that.
What's your go-to?
Clothing.
Okay.
Clothing, yeah. Clothing's my go-to. Yeah. So if you are thinking about doing hypnotherapy, it does work.
I might have to try. You know, I have a big thing for supplements. So I'm maybe a sucker, you know, when I'm on social media, all these great new supplements for this, for that. And I always give it a shot.
Right. But the thing is with that, and it's funny you should say that because I actually was talking to somebody that I wanted him to come on the show. Because I'm big into supplements too, which is funny because most people, you know, probably think a lot of that is like hokey. But there was a gentleman by the name of Reed Eckert. He'd passed away, but he owned Nutrition Direct in Tamarack, Florida. And I was very tired. And I started to go to him and started taking supplements. And I have to say, it was life-changing.
Yeah, there's some great ones.
Yeah, it really helped me to really live up to the Wonder Woman status.
Of course, yes.
And people laugh, but, you know, all that kind of stuff is very helpful.
Very high. Now there's a lot of big things on peptides, which is the new thing. But
you got to do one at a time and wait and see, and then maybe take one away or something.
Of course. And always seek a little medical attention as well before you do something new.
Yeah, don't use AI for your doctor.
Right, no, definitely not.
So the reason why we're here, let's go back now that we've talked about New Year's resolutions. So I'm not shopping, but those that are out shopping for houses, what can we tell them?
So a lot of exciting news going on in the industry, and the best news last week, I'm sure you've seen it or you saw it, the 30-year average on the rates hit 5.99% on the 30-year fixed.
Now, didn't we have that last year? Something like that happened?
This is the lowest rate this is the lowest since we've been in the last 3 years, where the 30-year actually, on a national average.
Oh, okay. And not like FHA where that was already.
Exactly. Okay. So a national average, 5.99%. That's big news. You know, as I've mentioned before, the largest impact on housing are interest rates. Once it gets known that interest rates are coming down, you're going to see a lot of people, motivated, taking action, coming off the fence. And I'm looking forward to a really, really big 2026 with a lot of good things happening.
Wow, that's awesome. So if that is on the national average, so what would an FHA loan look like? And maybe we should explain, because some people really do and don't know what an FHA loan is and how that works.
Yeah, sure. So, when we're talking national average of 5.99, they're always talking conventional, and conventional is anything that's non-government. So when we're talking FHA, we're talking a government-backed loan. So, and they're self-insured on these loans. Typically, the rates generally are lower on FHA, but the costs are more. So my first option is always going to be conventional.
Okay.
But if you're looking for interest rate, the interest rates are lower, apples to apples, on FHA.
And when you say lower, so FHA obviously would have mortgage insurance.
Correct.
And obviously, if you went to conventional, you wouldn't have. If you put 20% down, I think there are some 10% down programs.
Correct.
Too.
So with FHA, there's always mortgage insurance. Conventional, with that 20% down payment, there will be no mortgage insurance. You can put down 50%, 60%, 70% on FHA, 80%. There's always going to be mortgage insurance. The only exception, if you're doing 10% or more on an FHA, it will be removed after 11 years. Otherwise, it's for the
why 11 years?
Otherwise, it's for the terminal loan. That's, they've done studies. They put, they have the brain trusts in a room, and they determine, 11 break evens. What are we losing? What's our risk? And they need to earn that insurance for at least 11 years.
And that it started when? Because if you have an FHA mortgage from the last 8 years, maybe there was never removing.
There was never removing.
Now, there was before that. You could, once you hit 20%, then it wasn't, you couldn't. Now you're saying.
Yeah, so this came.
But people need to know that, because if they go, I have an FHA, 11 years I can remove it. Not necessarily.
No, not if it was originated prior to those guides. So this came about, again, I don't know the exact date, but my best guesstimate, and I could get back to you on the exact year that was implemented, but I'm saying that's about 6 years ago.
Okay.
Yeah.
Okay. It feels like it was more recent. But
feels like yesterday.
Yeah, well,
so does high school.
I don't know about that. I'm kind of glad it's not.
Right.
But TRID was something that feels like was yesterday. But everybody was so worried about it. And here we are today. We're just fine.
I just, I think back when we used to, boy, do I miss that good faith estimate. Remember the good faith at the GFE? Then they turned it into the loan estimate, and that whole training. I feel like we had training on that for about 1.5 years before it was implemented.
Oh, yeah. And people were freaking out.
Oh, when they rolled it out, it created a lot of issues because, again, one of the TRID guidelines, you must be in receipt of that initial closing disclosure 3 business days before a closing could even occur. And that caused a lot of delays, if you can imagine, back then.
Wow.
Yeah.
So I heard you speaking earlier about that the government's going to be purchasing bonds.
Yeah, so that's interesting, and this is not something that's new. We see this, in different events throughout history. Quantitative easing. We saw this during COVID. The great financial crisis. You have to understand how mortgage rates trade. Mortgage rates trade based on the activity of mortgage-backed security bonds. So basically, let me give you and how do bonds move? Let me give you an example. Let's say And for easy math, let's say you have a $100 bond priced at $100.
Okay.
And it's paying a coupon, an interest rate of 6%. That $100 bond is trading in the market daily. It's a $100 bond face value, and it's paying you $6 as an interest. That's 6%. We could agree on that, correct?
But it's not. Is it compound or
It's
is that
a 6% interest annually on your $100. So it's a 6% rate. Now, what happens if some news comes out that inflation is getting worse? Inflation is getting worse, which was the case over the last several years. So what happens? What's inflation? The price of too much dollars chasing too few goods brings up the prices of goods. So prices are going up. So a price of a hamburger next week is going to be more than a price of a hamburger today. So that $6 that you're getting paid on that $100 bond is less valuable in the future.
right?
So what are people going to do what's going to happen to that bond? People are going to sell the bond, right? Because they figure, well, they're going to have to issue new bonds at a higher coupon because costs, are going to be more. So when there's selling that comes into the bond at $100, it brings down the price of the bond.
Okay.
And so now, instead of being $100, all that selling took the bond price down to $90 or $80. So now you have an $80 bond. It's still paying that same $6. But what's your yield? If you now only have to pay $80 to get that same $6 bond, because that $100 bond is paying $6,
right?
But it's now $80. So you paid $100 for it last month. I could buy that bond now for $80 because all that's selling.
It
still makes $6. So my yield just went up to 6.5 or 7.
Okay.
So,
but why does that happen?
Bond prices go down, interest rates go up, and because all that's selling. That's how bonds trade, basically in economic news or different events in the economy. So what happened last week? The government said, you know what? We're looking to buy $200 billion worth of bonds. So if $200 billion worth of purchasing power buys those bonds at $100, the price of that bond that's paying $6 is now going to be $120, because buying power, supply and demand, brings up the price of that bond. So now you have to pay $120 to get that same $6. Now that 6% yield is now 5%. Bond prices go up, interest rates go down. Not what the Fed is doing. That is the direct correlation on how mortgage rates work. Bond prices go up, interest rates go down. Bond prices go down, interest rates go up.
So by them buying $200 billion or $1 million or whatever.
A lot of buying.
Right.
Brings up the prices of the bonds. So now those $100.
But what happens when they go to sell the bonds?
They're going to sell it at 120, but you're going to be willing to pay 120 because you're going to be getting a higher dividend eventually. You better buy now, because these bonds, you better buy it now because these bonds are going to be it's going to be less valuable in the future. So, but it's a good question. What happens when people sell? Yeah, if there's more selling that's going to come in, if more selling comes in, it's all supply and demand. More selling than buying, prices are going to go down.
More selling than buying.
Yes.
Prices. Okay.
But for now,
since they're buying, the prices will go down.
Yeah, they're not saying they're selling the bonds; they're buying the bonds.
But what are they going to do with them? Just hold on to them?
They're going to keep, they'll keep it on the balance sheet, and and this is what's happened, during COVID. We were trying to stimulate the economy, so that's why rates got down so low, because it was really quantitative easing by the government. It was artificial. We were creating all that. We were buying billions and billions and billions of bonds. And the Treasury was keeping these bonds on their balance sheets just to get interest rates low to stimulate housing or stimulate the economy.
So that entire time they had owned a bunch of bonds.
They owned a bunch of bonds.
And when did they sell these bonds?
Great question. They started selling roughly around the springtime of 2022. And if you look back.
And I think it was actually spring of 2023 that the market started to.
Actually, it was basically spring of 2022, in my opinion, and it's directly because of those interest rates going up, because that's when the Treasury said, you know what? Not only are we going to stop buying these bonds, we're going to start decreasing our balance sheets. We're going to go into the open market and we're going to sell the bonds. So they put so much pressure on these bonds, bond prices came down, interest rates were going up for the last few years. And that's why I always say in my business, people always ask, well, how's the mortgage industry going? And my answer is, we've been consistently inconsistent for the last several years. And that's because of interest rates.
So, okay, so we're going to go to commercial break. When we come back, I want to see what your outlook is on where you think rates will be by the end of 2026.
Absolutely.
And before we do go to commercial, what is a good number for people to reach out to you to?
Best number to reach out is 561-213-6852.
Okay, and if you're looking for a top agent, definitely want to give me a call. Laura Sanders, Remax Direct, 954-650-0827. And again, we're going to go to a commercial break. And when we come back, I want to hear what he has to say because we all want to know what rates will be. Stay
I
tuned.
have the answer.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our number one priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
Hi, everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today, we're talking about mortgages with Cliff Bernstein from Fairway Mortgage. The other thing that I was talking about earlier was New Year's resolutions, and I was talking about not shopping. The other New Year's resolution I have is decluttering, and I have a little thing on my Facebook that you could take a look at to see what to do day by day, what to declutter to make 2026 amazing. For some of you that believe in, holistic approaches, last year, which it will be until actually February, I think 18th, 17th, something like that, was the year of the snake. So you're shedding. And this year will be the year of the horse. So
Great.
Yeah, so there's some really great things in store. If you believe in that stuff, which I do, like I don't walk under ladders and I don't.
I believe that too.
Yeah, I freak out if I break a mirror.
Well, if
so
a black cat just runs across your car.
yeah. As long as you don't hit it, I guess he was lucky.
Yeah. Yes.
So definitely check out my Facebook, Laura Sanders Realtor. You can see what we're doing. Yesterday was decluttering a drawer. I did it.
Oh, it's great.
Yes, and I threw away a lot of stuff, getting rid of old prescriptions, things of that such. There are people that you can call to come pick that up. So new year, and if you're looking for a full-time position as an executive assistant, we are hiring.
Great.
All right, so tell us with your crystal ball.
I have my crystal ball.
Yeah, tell us, what do you think rates are looking like in 2026?
If we had this conversation a year ago, I'd probably have a different answer.
Okay.
I do feel rates are coming down, and rates do have the largest impact on housing. But you know what also has another impact on housing? The economy, the job market. Now, that's been holding up very, very well. But keep in mind, a good, vibrant job market, full employment, is inflationary. And we just talked about that inflationary is not great for rates, because if people are employed, they're going to be spending money. And when they spend money, there's a lot of dollars going around and not as many goods, and it's driving up the prices. So because of that, and because of a lot of the new policies that are going to be coming into play in 2026, of a lot of tax credits and things like that, and the job market that's really holding up and the economy is doing well, and a lot of efficiencies because of AI. Because of that, I do believe rates will come down, but they're not going to come down as low as people feel or thought, maybe as little as 6 months or a year ago.
Okay.
But if I had to put a number on it,
Yeah, and we can check back to see how this looks.
Let's do that.
I would love to see that. I would tell people,
Let's do that. I'd like to say 2%, but it's not happening, and I don't think it's ever going to happen again in my lifetime, unless I keep taking these supplements that we talked about, and maybe it will. But if I had to put a number on it, I think we will see the national average end of year of 2026, definitely with a 5 handle. But I'm thinking around 5.625 to 5.75, in that range on a national average. And I think that's I think that would be wonderful for housing. I really do.
Yeah, I mean, I did see an uptick in purchases in November.
Yeah. Yes.
And then I saw it slow back down again in December.
Which, it's usually like, and I'm sure you experience this as well, it's random. Some Decembers you're so busy, and others you're just so slow. And people, it's the season. It really, it's hit or miss sometimes on December, but I felt this December very, very slow. Everyone seemed to be in party mode like a week before.
Maybe it's how the holiday fell. Well, it fell on Thursdays.
Yeah.
Both times.
Both times, right.
Right. So we had November, and so I feel like that affected full weeks in each month.
I just also feel we're still feeling the impacts, the effects of COVID, where nothing makes sense anymore. Remember, you had seasonality. You knew the springtime, it's going to get busy. And then we had COVID, interrupted that because
everything was busy.
Nothing happened. But, for a while there, when it first in March and April, it stopped. And then it just took off. Yeah. And then the summer was really big. It usually slows down in the summer, and that's when it took off. And I
should have cleaned my garage when COVID started, and I didn't. I kept going to the office.
That would have been, or my desk. Sometimes you're talking about decluttering. You open up the desk and you have things in there from like 7 years ago.
Because you think you're going to use it, or
you
think you want to use it.
You're like, I might need this.
Right. And I think that, you have to sometimes say, do I love it? Do I really need it? And I think that the hypnotist did that with the shopping for me.
Well, could I get rid of this business card? Am I really going to talk to?
Well, maybe put it in my phone. Scan it or something.
Right. Yeah, but I'm not going to. I say, well, that'll be a job. Maybe on a Sunday afternoon, I'll scan 150 of these cards into my phone. It just doesn't happen sometimes.
Well, that's why you have to do small. So like yesterday, the decluttering on my Facebook, it said to empty a junk drawer. So I did yesterday morning before I left to go to work. I emptied a junk drawer.
It's the best thing ever.
Yeah. So now I have to do another drawer today. So every day is going to be something until I get myself, and with not shopping, this could be.
That's amazing that it really took away that, that need or that urge.
I'm telling you, the hypnotherapy was pretty great.
I could imagine you could do that for anything, right? To be hypnotized?
Yeah, so I did it years ago to stop drinking Diet Coke. And then I gained a bunch of weight, so I wanted to go back to Diet Coke, and I did.
Okay.
I did it before taking my test to be a therapist, because I'm a licensed psychotherapist. And I aced my test, so I truly believe in it. But it's also being susceptible to it, being able to be guided. The gentleman that I went to, he's 82 years old. Wow. He's been doing it for over 50 years.
Amazing.
Yeah, he's good.
That's really amazing.
I mean, I think the next thing I'm going to have him do is tell me to stop eating.
Or picking my nails. Sometimes I pick my nails. That might be helpful.
It could be.
And you're sitting around in the office, you
That's your nervous tick.
That's my nervous tick.
Well,
So,
I'm
yeah.
telling you it works. So if anybody's interested, definitely reach out to me. If you're thinking about buying or selling a home, definitely want to reach out to me. You want to reach out to Cliff. We've got an excellent team of people, whether it be title companies, what have you, to get your deal done.
Yeah.
And anything special you want to offer out to them? Like sometimes I say, if you call and say chicken to Cliff.
If you call and say chicken, I'm going to give you some Parmesan cheese on that. Listen, I always extend my offer, and I'm always available. That's my thing. I love it when I get a call from a client on a Sunday, at 4 o'clock, and all they do is I'm so sorry. For the first 5 minutes, they're apologizing. Well, we could have been finished with the conversation. But my response to them always, listen, if you don't call me on a Sunday, I'd be living under a bridge. And that's really the way I feel. It's 24/7. I'm always available. You don't need to have an obligation like you're buying a home or you're refinancing. It might not be something you're doing for the next 3 years.
But it's building on it.
Exactly.
You're building on
And
it.
you're getting information, and it would be my pleasure. So that's what I could offer everybody. I extend that to you, the audience, everyone.
Okay. And again, tell us what is a good number for them to reach out to you.
The best number is 561-213-6852.
And do you have a Facebook to follow?
Yes.
Or Instagram?
The Instagram is Bernstein Cliff. So it's Cliff Bernstein in reverse, because there's so many Cliff Bernsteins out there. I was running into, no, I think I'm the only Cliff Bernstein in the country. But Instagram, it fell out, Bernstein Cliff. Please give a follow. I do some educational stuff on there, some great stories. So I'd love to see you.
All right. And if you're thinking about buying or selling a home, you want to make sure that you show your home in the best light possible and avoid inspection pitfalls, then you definitely want to give me a call. Laura Sanders, RE/MAX Direct, 954-650-0827, or check me out on the web at laurasells.com. And until next week, make it a great one.